Hello and welcome to Chapter 2 of Auditing and Assurance Services. So in this chapter, we're going to talk about professional standards. So the SEC, the Securities and Exchange Commission, may need to prohibit trading in about 270 China-related companies as early as 2024. Now it's up to Beijing to let the oversight board in so that they can ensure that the audits are up to U.S. standards. This was actually stated by the chair of the SEC Commission to the Wall Street Journal. In this chapter, you're going to learn and understand generally accepted auditing standards, GAS. You're also going to learn about several fundamental principles, starting with responsibilities and how that principle relates to the characteristics and qualifications of auditors. Additionally, we're going to talk about the principle of performance, and you're going to identify the major activities that are conducted during an audit. Then you're going to look at the reporting principle and understand the contents of the auditor's report. Lastly, we're going to understand the role of a system of a quality control and monitoring efforts in enabling public accounting firms to meet that level of professional quality. So we'll talk quite a bit about audit quality. So let's start with the history of the professional standard setting. So we start with the AICPA, the American Institute of Certified Public Accountants, has an audit and standards board, and that is mostly for non-public entities. And we have the Statement of Auditing Procedures, and now we have the Statement on Auditing Standards that started in 1972 till now. Then we have the PCAOB, the Public Company Accounting Oversight Board, and that gives us our auditing standards. And make sure that you are using the current auditing standards, which should be 4 digits, so you'll see standards as such. Basically, we have that generally accepted auditing standards and principles gives us these 3 different principles, right? So we have the responsibilities of the auditor, how we should perform the audit, and our audit report. And lastly, we're going to discuss the quality of public accounting firm practices. So let's start with generally accepted auditing standards. Here you want to identify the necessary qualifications and characteristics of auditors and how they guide and conduct the audit. So the purpose of GAS, or generally accepted auditing standards, is we want to achieve certain objectives when we're conducting an audit. And one of those is to obtain reasonable assurance about whether the financial statements are free of material misstatement. And we also want to issue a report on those financial statements and communicate that in accordance with the auditor's findings. So again, we're not saying it's free of error or free of fraud, even though we do have to test for fraud as an auditor. We are stating with reasonable assurance that the financial statements, including the supplemental notes, are free of material misstatement. And we'll talk about materiality in another chapter. So let's talk about the components of auditing standards. We have those fundamental principles that we just talked about. Then we have the PCAOB's auditing standards, and then we have the statements on auditing standards. And lastly, then we have some interpretive publications, which kind of guide us through those generally accepted auditing standards. So let's talk about an overall audit engagement. So we start with either getting a new client or retaining our client. Once we decide that we're going to actually perform the audit, then we do some engagement planning. Then as part of that engagement planning, we need to assess risk. And we're going to talk about audit risk, right, which has control risk, inherent risk, and detection risk. Lastly, we start collecting audit evidence, and we do that typically during field work. And we need our audit evidence to be sufficient and appropriate for the audit opinion that we issue. So audit evidence has to be sufficient and appropriate for the audit opinion, which ends up in our audit report. And then we have several different responsibilities that we as auditors need to do during this performance, right? We need to have professional skepticism. We need to make sure we have due care. We need to make sure that we're competent and, most importantly, independent in our reporting. So when we talk about the responsibilities of the auditor, we need to make sure that as auditors, we are competent and capable, that we have the experience and the expertise to conduct the audit. Additionally, we need to have independence, not only in fact, but in appearance. So we cannot have financial and managerial relationships with our client. We need to stay independent and perform our audit with due care, which is a reasonable auditor, what they would do in similar situations. And then we need to also exercise professional skepticism and professional judgment. So with professional skepticism is always have some questioning. Have a critical assessment of the evidence that you're collecting during field work. And your judgment, make sure that you're applying all the knowledge and experience you have in order to make informed decisions during the audit process. Now, when we're actually talking about the performance principle, here the goal is to provide that reasonable assurance that the financial statements do not contain a material misstatement. So when we are performing, we start with the plan, right? So we start preparing our audit plan. Then we establish that materiality threshold. And this is what's going to influence decisions of those users of the financial statements. And we're going to think about materiality throughout the entire audit. And in our planning, we're also going to look at risk assessment, right? We need to understand the entity. We need to understand the environment in which the entity is conducting business. We need to understand the internal controls, and we need to develop a substantive testing in order to assure that the internal controls are in place. And as I mentioned earlier, we need audit evidence that is sufficient in quantity and appropriate in quality to help us issue the audit opinion. So now when we're talking about evidence, we have detection risk, right? So we want to make sure that the quality of the evidence is sufficient and the quantity of the evidence is sufficient. So this is just a visualization of all the words in the previous slide, but I like pictures. So now when you're talking about evidence, right, when you're talking sufficiency, we're talking quantity, right? So it's how much, the number of transactions that we're going to put in our sample, or what influence the effectiveness of the internal controls has. So if we have a lower risk of control risk, then we don't need that much evidence. We can do less. But if the higher the risk, then the more evidence we need to gather, whether it's attribute testing for internal controls or substantive testing. And that's just a good rule of thumb. The lower the risk, the less we have to do. The higher the risk, the more risk of material misstatement, and then we would gather more evidence. So then our sufficiency goes up. So then when we're talking about appropriate evidence, this is all about the quality of the evidence. So is it relevant? Does it actually test the management assertion of completeness that we're trying to establish? And then the reliability, where is the evidence coming from? And here, as auditors, we need to draw on our personal knowledge, and we need to not only get evidence internally, but also externally. Third-party evidence has a higher appropriateness, let's say, than any document that's internally generated by the client, as a rule of thumb. So again, if we have effective internal controls, we have lower control risk, so we're not going to do as many substantive testing or substantive procedures. But the higher the risk, as we know, then the more we have to gather evidence as well. So now when we talk about the reporting principle, here this is what the end game of our audit. So here we're expressing an opinion, or we'll either state that we cannot express an opinion on the company's financial statements. And when we're looking at the financial statements, we're looking at them against the financial reporting framework. So we need to set a criteria to determine the measurement, the recognition, the presentation, the disclosure of these material items in the financial statements. And typically we do everything according to US GAAP, right? Or Generally Accepted Accounting Principles, or IFRS, the International Financial Reporting Standards. And those are the top two regulatory bodies that help us establish the financial statement framework that we need as auditors. So when we talk about the independent auditor's report, usually it starts off with a title, right? So it's usually the report to the independent registered public accounting firm. Then we address it to the board of directors and shareholders. We issue the opinion, and when we state that paragraph, we say as auditors that we conducted the audits of the financial statements and also the internal controls over financial reporting, ICFR. Internal controls over financial reporting. We would issue an opinion on the financial statements and on the internal controls over financial reporting. So that is an integrated audit for us. We will do both. You can issue two different opinions. And then we say the basis for this opinion is that it's the responsibility of management and auditors for the financial statements. And then we usually give a description of the audit that was conducted under the PCAOB standards, which is GAAS, Generally Accepted Auditing Standards. Then we have a critical audit matter. So here, if we do see material accounts or material disclosures, we will bring those to the attention in our audit opinion. We would note any challenging or complex judgments, and basically we would coin that under critical audit matters. Then it's usually signed by the firm, and that the date that the audit was completed is the date that we use. So that is the last day of field work. And now we are also adding how long of the audit tenure is for that client and that audit firm. So here are the types of opinions that we usually issue as external auditors. So we have the unqualified or unmodified opinion, and those are usually that the financials are great, they're in conformity with GAAP, we're good. We might also have a qualified opinion, which is everything is okay except for some item. And that some item might be a particular account in the financial statements that are not in conformity with GAAP, but everything else is. So think of qualified as except for. Adverse is the third type of opinion, and here we are stating that the financial statements don't conform with GAAP. And a disclaimer of opinion is, as auditors, we don't express an opinion, and that might be a limitation of scope. You may not have gotten the information that you need from the client, so you just don't express an opinion. So the clean opinion up here is the one we like, right? That's the unqualified or the unmodified. Everything looks great. And then we are going to now discuss the quality of public accounting firms and their practices. So basically, we need a system of quality control. So basically, firms will have to provide reasonable assurance that not only the firm, but its personnel not only comply with professional standards, but also all of the regulatory and legal requirements, and that they are issuing reports that are appropriate for the circumstances or the evidence that was gathered. And then we have elements of this quality control system. So we call this the tone at the top, where leadership responsibilities that are there for the quality of the firm. Then we have to always make sure that we're adhering to all ethical requirements, that as an audit firm, we accept and continue client relationships and specific engagements, that we have an HR function, a human resources, we monitor the engagement performance as well. And here we have each of the standards and now the new standard on quality management. So we have several categories such as governance and leadership, again, the ethical requirements, how we are accepting or continuing to retain our clients, the resources that we have, the performance engagement and how we're monitoring and using a remediation process, and of course our risk assessment process and how we communicate this information to those within the firm. And then we have the PCAOB, the Public Company Accounting Oversight Board, and this is the regulatory body that monitors public accounting firms, and they do this through inspections. So if the firms are auditing 100 users, then they would have inspections annually, but if the audit firm has less than 100 issuers, then it would be every 3 years. And I highly recommend checking out this website because you will see the PCAOB, all of the inspection reports, and a list of the deficiencies in the audits conducted by almost all firms. There's no firm that escapes some type of deficiencies within inspection reports. And that is the end of our lecture. I hope you enjoyed it, and thanks for watching.